$1,856.17. So I've been investing in stocks for a little while now, and I've had some success. I actually studied a bachelor's degree in economics and finance before doing engineering, but we don't talk about that. Personally, I'm a fan of the value investing approach championed by this guy. This is where you try to estimate how much a business is worth and then purchase it when the share price is below its value. Then you can either sell the stock when the share price is above its value or hold it for the long term. I typically try to hold for the long term until one day in the distant future I can sell for a profit and repay my student loans. The annoying thing about value investing is that the process of identifying great businesses and calculating their intrinsic value takes a really long time. You've got to spend hours looking through boring financial reports to make sure they're in good shape, come up with a reasonable estimate for their future earnings, and then calculate how much that would be worth in today's money. Then figure out what price to pay to make your desired return. And most of the time after you've done all this work, the business is trading at a price that's too high anyway, and it's not a good investment. It's a super frustrating situation. That's when I remembered I also went to engineering school. I don't have to put up with annoying like this. I can write what can only be described as extremely mediocre, probably buggy code that's doing all the boring business evaluation stuff for me. So that's what I did. I wrote a program that looks through all the companies listed on the nasdaq, identifies the great businesses, calculates their intrinsic value, and then tells me what price to buy them for to make my desired 15% return. Then it puts it into a nice Excel spreadsheet for me, because who doesn't love a spreadsheet? I call my program the Analysis and Stock Selection Bot. The strategy is that it identifies great businesses. I've just assumed that any business that's grown its EPS by more than 10% for 4 out of the last 6 years is great. Then finds the price we should buy the stock at. Then it checks the stock price every day, and if the stock price is less than the price it calculated, it'll spend 10% of the available funds on that stock. I want to see if my garbage code is any good, so let's give the program $1,000 and we'll see how it performs over a year. If it doesn't lose money, I'm counting that as a win. Okay, it's done. $1,856.17. We're making money, baby. The code outputs the stocks it bought, the price it paid, and the date of the trade. Then we can see the current portfolio makeup after 1 year of trading. We were actually able to make an 85.6% return, which is above the 15% we were aiming for, which is awesome. So I would expect to see lower growth in future years, closer to the 15%. Over the same time frame, the S&P 500 made 77%, so we did slightly better, which is always good to see. If it was underperforming the broad market index, we would be better off just keeping it simple and buying an index fund. Also, this isn't really how I would typically buy stocks, with one lump sum at the start of the year. I usually contribute around $1,000 a month to my portfolio, so it might be worthwhile to model that. Yeah, I'm gonna do that. And we can see that the $13,000 worth of total contributions, our initial $1,000 plus $1,000 a month, grew to approximately a $21,000 portfolio. Not bad, I'd be happy with that. Let's take a step back and look at the main parts of the code. So first things first, it looks up all the stocks in this text file, then does some web scraping on Morningstar to get the historical earnings per share growth rates of these companies. This is just a text file I found online with all of the businesses listed on the NASDAQ. Then after it has the growth rates, it saves the companies that have consistently had growth rates above 10% to a second text document, these are the great businesses, then it looks through the growth rate variation in each of the great businesses and narrows down our stock choices even further. I chose to only look at companies whose growth rate hasn't fluctuated by more than 2.5%, because that should make it easier to accurately predict the future earnings. And I eliminated stocks that my broker doesn't offer. So the original list of 4,450 stocks has been narrowed down to these 30 stocks. Next, we're going to use something called the discounted cash flow model to predict the value of the company. We predict the future cash flows of each of these businesses forward 10 years. I do this based on their current earnings and their median historical growth rate. I want to be really conservative here, so if a company's historical growth rate was above 20%, I just assumed it would be 20% moving forward, and I reduced the growth rate by 10% each year from years 5 to 10. This is because I want to get a really conservative estimate of the value of the company, and a company's growth typically slows down as it reaches maturity. Okay, next I discounted these cash flows to their present day value based on the risk-free rate and the time value of money. And then I discounted the cash flow again using my required rate of return, 15%. This is the annual return that I aim for. This way, the program will be able to tell me what price I need to pay today to make 15% per year based on the estimated future cash flows. Then we apply a 50% margin of safety to allow for errors in my predictions. This way, even if the company doesn't perform as well as I anticipated, we should still see a good return. This was a super fun project that drew together a lot of different areas that I'm interested in. We got finance, we've got engineering, we've got web scraping, we've got spreadsheets. On top of that, we might actually make some money, so happy days. If you think I did a good job, bad job, have ideas for improvements, or want to let me know what I missed, please let me know in the comments. I want to set up some sort of alert system or use an API to automatically buy the stocks when the price is right, after seeing how well it performed. And remember, I'm just a guy on the internet. Please do not make any investment decisions based on anything in this video. As always, thanks for watching. Have a good one.